This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman and Riley Smith. Now, from the IARN studios in Des Moines, here's Riley Smith.
Well, good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Friday, June 24th, 2022. We're so glad you can join us. In today's episode of Ag Matters PM, I have a report from the U.S. Meat Export Federation on tariff reductions that we've been seeing recently. We also have a look at the ag weather outlook, but first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, we're at the closing session for another day in the agricultural markets, so we go to Jacob Burks of agmarket.net for a little bit of analysis there. Jacob, hopefully what we saw today was a bit better than yesterday.
It would be nice if we could keep this pattern going here through the weekend, but it was a nice little recovery in the corn and beans anyway, coming off of 3 days of just total 100% fund liquidation. Different things, sparking that sell off. But inevitably, we're right in the middle of a major weather market at a time where we can't afford to have a yield that suffers. And so I think it's got a lot of different volatility factors coming into this thing. There's a lot of things that the markets are looking at, but most importantly, we're in the next 2 weeks, basically. That weather forecast is really pivotal to where we go with this corn market. Beans to a lesser extent, but still following the way. And when you see volatile forecast coming in, along with a government that has the Fed has increased the interest rates to tighten the money supply up, and a government that's saying, hey, we got to get cheaper in corn, the markets go down. And so I think right now, this weekend's weather forecast, what we do on Monday will be heavily watched. You'll see, a lot of volatility one way or the other, in my opinion. I think that you see the market, we are disappointed with the rains over the weekend. We're going to see it. We're going to see a higher corn market, bean market as well. We see a market that got satisfactory rains across the Delta and across the eastern part of the Corn Belt. Then you'll see the market fall off pretty good. So that's where I think we're at. It's bottom of the ninth. It feels like almost.
Right, and like you said, some parts of the Corn Belt are getting the rain, others are staying pretty dry. So even with just the weather itself, we have a bit of volatility there. And wouldn't you say maybe the markets are just especially volatile because of a lot of fears of a recession coming up?
Yeah, when you tighten supply up and you tell we have to do something to slow the deflation or the inflation down, go from somewhere around 8%, and they're wanting it to be down to 2%. So the measures that the policy is going to take is a deflationary action. And as these guys have came in here and these funds that that you put your money into to hope that they make wise investments are in a position as a inflationary hedge, and they feel like inflation's over, you would hope that they take their money out of that inflationary product, which is the commodities. And so you've seen a pretty good pullback in the crude oil. You've seen, today's action today, right now, you're actually seeing the crude oil pop back up. So hence we've had a little bit of a bounce here. But I would say that there's a fear of recession. Whether you're looking at the livestock markets or the way you're looking at the grain markets, there is an opportunity here to see cheaper prices because of just money coming out of it, and that's how the market's reflecting it. We're selling off, and I got to take a breath of fresh air. It's going to be a supply situation that gets us out of here, and that's what we can't afford to have a yield go below where we're anticipating it right now.
The livestock market. So what are we like today as well?
The livestock market. I mean, we saw the cattle pull back here. We saw feeder cattle really strong yesterday off of getting the corn market getting hammered. So today we give back about $2 of that. I don't, with where we're at from, the cattle side, we're looking at that here in a little bit, seeing that cattle on feed number. To give back the gains they saw yesterday on a small bounce in the corn market was a little bit disappointing, but not devastating. Cattle market has been so strong in the cash market right now that we actually saw the June contracts a little bit higher. We did fall off a little bit in the August. I think a lot of the focus is on that cattle on feed report to see if they come, what they do with placements again this month. In the livestock, the one that surprised me yesterday was hogs just getting hammered. A little bit thinner traded market. You saw some fund liquidation there, and they got down $4 or something. Today we did get most of that back in the August contract. We're up $3.10. That's something that we've been talking inflationary, deflationary situation with the livestock market for a long time. But the box beef has come off a little bit. Cutouts have been strong in the pork market. Once those start to come down, we'll see that market probably follow as well.
Well, Jacob, lots of great information today, as always. For those of our listeners who would like to learn more and get in touch with the folks at agmarket.net, how can they do that?
If you get a chance, go to our website there, agmarket.net, and take a look there at the at the free trial, the 30-day free trial we have to get into our ag market intel. That's where you can get most of our information. Obviously, if you want to speak to us, there's a contact us page there. Get a hold of that. You can look me up here, jburks at agmarket.net. You can shoot me an email, and we can chat. Have a good one.
That again was Jacob Burks of agmarket.net. We'll go ahead and take a look at how those numbers closed on the day. That's courtesy of the folks at Bar Chart. At the close, July corn is up 3.5 at $7.50 1/4. December corn up 18.5 at $6.74 even. July soybeans up 17.5 at $16.10 3/4. November soybeans up 8 3/4 at $14.24 1/4. Soybean meal up $5.40 at $4.11.40. Soy oil up $1.42 at $66.93. Chicago wheat down 13.5 at $9.23 3/4. Minneapolis spring wheat down 9 3/4 at $10.70 3/4. Kansas City hard red wheat down 12.5 at $9.92 and July oats down 1 1/4 at $5.97 even. On the Merc, June live cattle up a dime at $135.35. Feeder cattle down $2.35 at $172.50. Lean hogs up $2.37 at $110.92. Pork cutout up $1 even at $111.85. And Class 3 milk up 4 cents at $24.33. And that's been a check of the Ag Market Recap here on Ag Matters PM. We're going to go ahead and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll be talking tariff rate reductions on food items that are being exported out of the U.S. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Well, South Korea is the latest country to suspend import duties on pork and other food items in an effort to combat inflation. Korea joins Mexico, the Philippines, Taiwan, Vietnam, and Brazil in reducing or eliminating tariffs on certain food items to lower consumer prices. While these tariff reductions sometimes benefit global competitors more than U.S. red meat, the overall trend is positive in that it recognizes the heavy burden tariffs place on consumers. U.S. Meat Export Federation President and CEO Dan Halstrom explained how food price pressures are driving the move toward lower tariffs.
Some of our global customers have higher rates of inflation than us. So now is the time to try to reduce that impact. And one way to do it is to offset or reduce or eliminate existing inbound tariffs.
For several of these countries, cutting tariffs is a bigger step than what we've seen from them in the past. USMEF Vice President of Economic Analysis Aaron Borer talked about some of the recent tariff changes.
Mexico eliminating tariffs on imports of beef, pork, and poultry, that's a bigger step than we've seen from them in the past. The Philippines also reducing tariffs on imported pork, but that was an extension of what was in place starting last year to help deal with their African swine fever related shortage. And the announcement for Vietnam actually came last year, where they're planning to reduce the tariff rate on pork imports in July of this year. One of the newest developments would be Korea announcing a duty-free quota for imports of pork.
With lower tariffs and thus lower retail prices, we could see an increase in demand in some of these countries. USMEF representative for the Philippines, Dave Rentoria, said a tariff reduction on pork imports prompted by African swine fever has opened the door for U.S. pork in that country's retail sector.
Many local vendors have shifted to selling imported pork and U.S. pork, primarily because of the lower price in the retail section. So around, I could consider maybe like 30 to 40% cheaper.
These tariff cuts will also benefit some competitors, but the U.S. should still see plenty of opportunities. Borer said that while some tariff reductions benefit competitors more, the U.S. had a head start in many markets because of early trade agreements.
Let's jump back to Korea, where Brazil and Mexico are expected to be the potential big beneficiaries of that duty-free pork quota that's been announced. But that's because they pay the 25% tariff on frozen, 22.5% on chilled, which is relevant just for Mexico. And even for Canada, where they have an FTA with Korea, their chilled pork is still at an 8.6% tariff this year. While with Chorus, which was implemented in 2012, the U.S. is at zero duty on all of our pork into Korea. And on beef, those tariffs have been phased down from 40% to 10.7% for U.S. beef this year.
The potential could extend even further if other countries adopt these tariff cuts to get cheaper meat. Borer listed some markets where tariff reductions could benefit local consumers and U.S. red meat exporters.
And that includes most of the African markets. It includes basically all the South American markets that we don't have an FTA with, so excluding Chile, Colombia, Peru. It includes the Caribbean islands, other than the Dominican Republic, which we have an FTA with. It includes India, Thailand.
As we've seen with several ag bills recently, a level playing field is incredibly important to ensuring fair competition. Hallstrom explained why a level tariff playing field is advantageous to U.S. pork and beef.
If we're on a level playing field duty-wise or better, we will win, because I'm convinced that with our industry, with our reputation, with our differentiated high-value product, if we're on a level playing field, we can compete with anybody in the world. And so that's why getting this tariff normalization is so important to all concerned.
For more information, visit USMEF.org. Well, let's go ahead and take a look at that ag weather outlook. Well, if you enjoy listening to thunderstorms as you sleep like me, then this morning was pretty nice for you, as a little bit of rolling thunder was going through the skies, nothing too loud or crazy, and gentle rain was going on this morning. Of course, that rain is nice after these hot and dry conditions that we've had recently, and this weather may even continue into the weekend, so let's go ahead and take a look at what the National Weather Service has in store for the next 24 hours. As you can see here from the National Weather Service, we might be getting a good amount of rain this weekend. Today we've got variably cloudy skies to the north and east, with chances of showers and storms in the south and west. Temps range from the lower to upper 80s. Tonight, chances of showers and storms will continue statewide. Lows overnight should range from the upper 60s to low 70s. Tomorrow, temps will warm in the south with chances of showers and storms once again. Highs will be in the lower 80s to lower 90s. Looking at the affiliate weather map right now, as you can see for tomorrow, Cherokee will see scattered storms with a high of 83. Shenandoah partly sunny with a few storms at a high around 87. Des Moines scattered storms and sun as well with a high of 90. Albia thunderstorms and 91. Waterloo storms and 91. And Clinton will see thunderstorms with a high of 92. For more detailed forecasts in your part of the state, check with your local Iowa Agribusiness Radio Network affiliate. And that's been a check of the Ag Weather Outlook, and that also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on Facebook, Twitter, and TikTok, and you can find our video content and previous episodes of AM PM on our YouTube channel. Don't forget our free twice daily market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Riley Smith. On behalf of Avery Haskell and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.